Welcome traders to this video analysis from Admiral Markets. We're going to take a look at the impact of NFP on Friday on this 4th of August and the weekly overview, also looking of course at the charts of the euro dollar and these pairs. First of all though, the disclaimer explaining that this material is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video analysis is for educational and informational purposes only. Thank you for your attention on this. We will take a quick look at what we have regarding the webinars this week. We don't have the weekly Forex recap and expert advice. I took away those dates, and the next Pro Learning Lab is on the 21st of August. What we do have this week is Live Trading Lab and the Forex Strategy on Tuesday, Wednesday, Thursday, so a bit scaled down due to the summer. Next week, no webinars at all, but we'll be starting full blast again with the usual webinar schedule from the 19th of August. Starting with the euro dollar daily chart, and Friday was a bullish candle with a bit of a wick on top, but definitely a pretty big upside on this euro dollar after a lot of downside pressure, of course. And the NFP numbers were a bit disappointing compared to the expectation. However, they were above 200,000, so maybe long-term speaking, not all too bad a number there, but a bit lower than the market expectation. So we did see the euro dollar bullish candle there on Friday, which causes wick at the bottom of the weekly candle. The monthly candle though, although we cannot see it too good because of the fib, so let me take that away. And if we look at the monthly candle, you can see a pretty bearish month of July. So this could just be a retracement of that bearish candle. We also broke out of this rising wedge on the monthly chart, in fact, and a break of that rising wedge could see, of course, a decent downside, I should say. So we have, of course, some intermediate support levels off this weekly chart. The monthly bottom is all the way at 127.70. However, obviously there are support levels in the way in between at 133, 131, 130. Those are weekly support levels before we bump into the monthly. Those are still levels to deal with and to reckon with. Before we actually talk about more bearishness though, as I said, we have a daily bullish candle, and if you look at the hourly, we see a good spike up. So on the hourly chart, we can see a potential for the euro dollar, in my opinion, to rebound a bit higher. The question is how far before we bump into resistance, and I think the 4-hour chart is an ideal chart to analyze that, because although we have maybe 1 hour bullishness when looking at this move up, we see bearishness on the weekly, monthly, daily. So how far can this bullishness on the hourly last? Well, if we look at the 4-hour chart and we put a fib from basically, let me zoom out here just a bit more so we can see it. If we put a fib on this 4-hour downside, in my opinion, turning spots for that daily, weekly, monthly bearishness could be, for instance, at the 135 level, which is the 50 fib, and of course the broken bottom, or even the 134.75 level, which is the 38.2 fib. So those could be turning spots for more downside, and price could then go to 133, maybe even 132 as targets for that bearishness. The pound dollar looks different. It actually has a bearish weekly candle, a very strong close near the low, and the monthly candle too, a harami, basically very bearish close as well. And price has broken with a decent weekly breakout candle through the uptrend channel that we can see on this weekly chart. Price is trying to box through that. Now, just because we broke out of an uptrend channel doesn't mean that it's necessarily totally bearish as yet, because we have a 166.90, 167 weekly bottom that is still not broken. So although we're not in the bullish uptrend anymore, we're not in bearish territory as yet due to the fact that the weekly bottom is not broken, but we do have clearly bearish momentum, and we'll have to see if price can break or bounce at the bottom against the line here. So that is the main question. As long as price keeps falling though, very bearish. Also over on the daily chart we see a lot of bearish candles that could hint to the fact that we could see maybe some follow through to the downside, but some bounce off of that magenta line to retest 170 for instance, and maybe create a head and shoulders here like this where I have my cursor. It could be something that has potential in the future. So to recap, maybe some downside pressure, but eventually a bounce off that level could happen. And if we respect the 170 level, what could happen is a head and shoulders pattern like this for further downside. That is something that could happen as I show on this chart with the colored penciling there. So that is an option here on this pound dollar. In the meantime though, you can see on the hourly a lot of bearishness. As long as we stay below this orange line, we could see a further extension to the downside. Also, if you put a fib on, anything below 169 is still in bearish territory. So either a move back to the 38.2 fib, or if we stay below this trend line, or if we break below this support line, we could see that follow through. If we break above it, we could see a bigger retracement up to 170, 170.40. The odd USD, in my opinion, is a bit of an awkward sideways move. We did punch through maybe some support levels like this trend line, for instance. However, all in all, it's still awkwardly going sideways. We really need to break below the magenta bottom at 92 or above, let's say 94.60, 95 resistance to have a decisive factor, this idea which side this odd USD could break to. Obviously, last week was bearish. Last month was bearish, so there is some bearish pressure there, but 92 pretty key in my opinion at the moment. We did break through 93.30, so for the moment price could be hooking and finding resistance here at that broken support level. That could be potential move from here down to 92. If price breaks above the green line, we could see maybe some retracement back to 93.90, 94. So not a lot of space at the moment on this Aussie. Dollar yen had a strong momentum to the upside, but it ran into the 103 resistance and just couldn't continue anymore. So that is the top of the range of a consolidation that you can see on the weekly. Looks like this, like that, and we're relatively close to the top. 103, 104 are resistance spots here on this weekly chart, as you can see. So a break below 180, 101, we could see maybe a fall down to 97 to the blue line. A break above 104, we could see an upside break. Anything between 101-ish and 104-ish remaining in that consolidation, basically. Well, folks, that wraps up the webinar of today. Thank you so much, the video analysis I should say. Thank you so much for joining us, and hope to see you all very soon in this week's webinars. Cheers.